Good evening, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is at 6 p.m. Central Time on this Thursday, the 6th of April, 2023. So I want to wish everybody first, happy Passover. Next, tomorrow's Good Friday, and of course, happy Easter. That will be on Sunday. There are families traveling all over. I have a house full of people coming in the morning, so I'll be jammed all weekend, just like so many people are. You know, come the Passover, Easter time, everybody joins in, so it's nice to have a family with us. And tomorrow's an interesting day. Let me explain. Notice the S's. You haven't even opened in any of the metal markets, okay? You don't see openings in any of the energy markets. Grains are all closed. So what's going on here? Well, the markets that are really open are going to be the interest rates, stock indices, and currencies. Everything else is pretty much closed for Good Friday. And guess what? In the government's wisdom, I always am amazed as to how they are. Instead of delaying the jobs report for one day when people are at their trade desks and they can react properly, they're going to release it tomorrow. And they're going to do it in what's called ultra-thin market conditions because the stock markets are closed. So the reaction to it, who knows what it's going to be. What I like to do in front of that is this. Liquidate the books. If you've got these markets that can be at risk, take a break, enjoy the holiday, and come back to the market afterwards. I am not able to jump fast enough on a train track, stand there, a bullet train's coming, and you're going to get it just right at the last minute. Sure you are. You're not. Then you get the thinness of this. Who knows what it'll do? So everybody has their own techniques. I've got 53 years now in this industry. I was thinking about them. In September will be my 54th. I've been at this a long time. I remember the old chalkboards on the floor. It's unbelievable. And then the flipping boards and what it's gone through. And I think of myself like I'm 16, so I feel pretty good and I'm in good shape. All right, so let's go to the charts and get a bit of a feel. First off, you know the battle. The battle's between the naysayers, as I've named them, the people that are totally convinced that the government is not, and I'm talking the Fed, they are not going to be able to stay the course. We'll have too weak of an economy. There's other shoes to drop in both banking, commercial real estate, and that they will have to sit back and not keep these rates as high. That's one school. The other school is the Fed. And the Fed says, I hear what you're saying. The problem is we have two mandates. We have full employment, which we have. The second mandate we have is inflation. We don't have that under control. You're about 3 times what you should be in the inflation number. And in order to get it under control, we have to create more unemployment, in turn, less purchasing power, and in turn, take inflation down. It's that simple. You don't have to agree with me, but I think I'm right on the money, and I've just made it simple. You don't have to have a Harvard MBA in order to explain some of these things. I wish I had one, but you don't need it to understand it, okay? You just got to read, understand. If you look at the velocity of money, like an M2, pay attention to it, all right? Start learning that. It's not moving through the economy. It's slumped, which means loans aren't happening. I realized that Mr. Bullard today, the St. Louis Fed president, said he doesn't see that. I do. And in my report, I showed what happened since the SVB incident there. He may be right in the longer term. I'm certainly not equipped to argue with him. He's much brighter than I am. But I think I'm on the right side of it. And I think you'll have a hard time getting a loan if you go to a bank and you decide, oh, I need money. I've got this commercial piece of property. I know you're going to tell me it's not fully occupied and all that, and it's losing a little money, but I need the loan to keep going. Sure, the bank's going to work with you. When you come to the micro S&P, you've come up, nice play here. Again, the naysayers keep buying the brakes. So let's assume you get a jobs report that looks bearish. Let's assume that the hospitality and service numbers are strong as can be and the market cracks. You know what's going to happen. The naysayers are going to pick a spot on this chart again and they're going to buy it. They don't let the market stay down. They're convinced they're right and the market's going to turn. At this point in time, you do have the trend up, higher lows, higher highs. You got the crossover I told you all week was going to happen. The 18-day average is crossed now over the 100 and it's over the 200. This is a classic bullish setup. It normally results when you get these crossovers, and that's all I can tell you, in this high being violated. Does it have to work that way? Of course not. Do I expect it to? Over time, I do. All right? On breaks, this is going to be a big support area as well. So will the market pull back to it? I haven't the slightest idea, to be honest. I don't know what tomorrow's report is going to hold. In terms of embedded reading, you have it. Now, if this 83 reading ends up tomorrow finishing under 79, I tell my clientele to run for the hills. The odds favor you're going to break down. I know you'll say I talk out of both sides of my mouth because I'm still saying I expect on the crossover to get there. That doesn't mean you can't come down first. That's all it is, all right? Now, if you get the crossover and it reverts back down, that would be a failure on it. Don't see that yet. So I'm definitely bullish the market going into the report until you lose the embedded reading and the trend is up. In the NASDAQ, you lost the embedded reading. So my work says the odds favor you're going to go down to the 18-day average before you make a new high. In the mini Dow, it's embedded like the S&P. The market's run into a brick wall temporarily at the combination of the green line, the 100-day average, the Bollinger Band, and it's fallen back. In a positive note, you just had a bullish crossover. The 18-day average is now getting over the gray, the 32,815, the 200-day average. The 100's way up here. But that's another form of bullishness occurring in the market. And in the Russell, this is the laggard of the market. And I keep hearing analyst upon analyst saying how much they love the Russell. They've missed out on all the moves. If you're going to be bullish, you buy the strength, not the weakness. That's what I think. In the T-bond market, you're up at a Bollinger Band. I would never teach a trader to buy a Bollinger Band, and certainly not buying when the markets are overbought. I'm not bearish, I'm just not bullish. Same thing in the 5-year note, identical play. In the dollar index, I'm super bearish. You know it. If you saw my metal report, you see why, what's there. But I want to see that jobs report. I'd love to be able to come into this market at better prices than where we're currently at. Don't know if I'll get the opportunity. And if I have to put out sells lower, guess what? I'm not scared. I'll put them out lower. I'm a chartist. There is no such concept to me. And this is something you should learn is high or low, expensive or inexpensive. I know this because I was in a potato market fiasco very early in my career. I think it was the 70s. It was Simplot, if I'm correct. And I watched the bag become worth more money than the potatoes in it. I know you're laughing at this. Do not laugh at it. These events happen. Limits every single day. Nobody could get out of the market, all right? I saw it, and it taught me right off the bat. The beautiful thing is I'm a human sponge. I learn. And I said, I get it now. What can happen? I understand why people like to buy rather than sell, except that doesn't work for me real well. Why? They think there's not as much risk. They are right in one area. If something is only allowed on a futures contract to go to zero, they're right. I had a huge client that left me because we had a huge argument. I want to go back 8 years ago, 7 years ago, monster player in Fed funds. And he's telling me interest rates cannot go negative. And I'm trying to explain to him he is wrong. And I explained it till I was blue in the face. And he eventually just said, he called me stubborn. I'm wrong. It can't happen. You do know we saw negative interest rates in many central banks around the world. I never heard from him again. Tim, if you're watching this, to give me a call. I was right. You can't go below zero in certain commodities, though, all right? So if a potato contract goes to zero, it's zero. It didn't go to zero, but in theory, if it goes to zero, it's zero. It's not going to go negative. Interest rate futures can. T-bond market, lower low, higher high, or real rates can go lower. You've seen that. In the Bitcoin, all of a sudden you lost the bullishness. I said this to you yesterday, and look, you're making your attack again at the 18-day average, and the energy markets are stuck here in the $4.25, $4.50 zone. If you look at the energies, you have gone to a total stall since OPEC made that announcement. You had that big day up, and for the past 3 days, you have just stalled right here against the Bollinger Band that is not embedded, by the way. I'll let other people want to own that. Same in the WTI. Embedded, my whole game changes. So you got to learn to work with that. Rebob gasoline, embedded reading. You know, I went on, put out a big report for everybody about 3 weeks ago, said I think that you're there. I think you're going to see the spring, summer come alive. It most certainly has. In natural gas, I've got a problem with nat gas. I had one of my people write me today, it was on YouTube, in fact, and he said, what's with natural gas? Well, first of all, don't look for a bottom in it. If fracking picks up, what is the byproduct of fracking in Texas and our other big basins? You know what it is. It's natural gas. You're going to have more of it, not less of it. So you got to think this very much through and understand the game. And people look at this, they go, oh, it's got to be bullish. Why? People thought $2 would hold. It stalled. Now you're back into the 190 level. You're 199. Today you closed $2. But you see what's going on here. The market's having an issue with it, and pay attention to that. You know, one of the things I explained to you just a while back, moments ago, was you see outside days all the time. They're called a continuation pattern, but you can easily call them, if they're violated, a non-continuation, and the market goes the other way and it's a bull trap or a bear trap. It happens all the time. And it is one of my patterns that's one of my favorites. I look at it all the time. I created 9 video chapters in a course that you watch. 9. That means you're going to master this in one day. You're going to look at it, and I give you examples in stocks, futures, and ETFs, but those examples were history. I want to prove to you where the patterns come in. So what we look at in the mornings, in my morning research, my morning subscriber videos, we're going to look, and you're going to get 14-day access to that, along with my ETF to anybody that qualifies for it. You're going to get the charting software, and you're going to see for 2 weeks, as they unfold, me explain them to you in real time what they're doing. So you see the theory, then you see the real application of it, all right? That alone will help you. These are not expensive, all right? It's not a big course. It's not expensive. How do you learn? How do you get it? It's simple. You can either call us or you can just go to our website by clicking up here. There'll be an icon. If you're listening and you can't do it because you're on an iPhone or you're on an Android phone, that's fine. It's iraepstein.com and then education. It's under education. iraepstein.com, go to education, you'll see outside day course. I'm Ira Epstein. Have a great holiday. Here's what I'm going to be doing for the holiday. I am not going to tomorrow morning post my normal time of 5:15, 5:30 when I start recording the morning subscriber video. I'm going to do it right after 7:30 a.m. Don't have the ETFs open. I'm not going to record a morning course, probably a morning video for anybody. I doubt that I'll do that. I'll do my subscriber video and take it from there. If I feel the energy, then at about 8:15, I will record a general morning video like I always do with the financial news. I'll probably end up doing that knowing myself. If you know me, I'm a workaholic. I'm Ira Epstein. You have a great holiday, great Easter, great Good Friday. I'll see everybody again over the weekend when I do my market reviews of all these markets. Take care.